next 5 years. Is that all worth it?
Yeah, let's look at the comparison, Matt. I mean, when you look back at the dot-com era, there was a lot of spending on the fiber side, right? And that's what we saw sort of blow up. And they said, okay, we've got the fiber laid. It's going to be dark for a while. Is it going to be used? That's not what's happening here, right? The AI chips from NVIDIA and others, those co-designed with Broadcom and Marvell, these are chips that are being used. A lot of people are asking, though, are there applications that are going to make companies money, or are they going to give up on this at some point? So that's what creates the fear, that we might be seeing another bubble. But what's different now is we're seeing more and more applications develop. Even if they're not making companies money as of yet, we are seeing some make money. Look at ServiceNow. They're deploying AI. Look at Salesforce. They're deploying AI. They're finding efficiencies in it. And so we're at a point where we don't know exactly how much in applications will emerge, but we're still at a point where
Joanne, we'll talk about all that and more next at the opening bell.
In this facility, which is part of your $2 billion investment in the last 2 years, it's a massive amount.
Yes, because we've focused a lot on automation and upgrading our quality standards so that we can adhere to the US FDA and European standards, because some of our vaccines now are going even to the West, which is a fundamental shift in our strategy, from back in the day when my father started the business, where we were predominantly in India and the developing
India-centric, now you're more global.
Yes.
So you're about 8,000 strong in this facility? All Indian nationals?
Mostly Indian, yes. I would say 99% of talent that we've trained overseas and in India. We have our own internal skill building center where we train on site.
Serum started with just producing vaccine for tetanus, but it's producing a lot more vaccines now. What is the next big thing you think?
A global pandemic flu vaccine is something that we're working on, and I think the world will need that. Not only for the annual flu cases, but God forbid there's a flu pandemic. I think we are very well poised to make 1.5, 2 billion doses and roll it out very quickly to protect the world. And we have, of course, the other vaccines, as we talked about, HPV and malaria, that we've just launched, and we're going to scale that up as well.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We are moments away from the start of trading, and Bespoke Investment tells us this will be the biggest gap higher on a Monday since 2022. I'm Matt Miller. This is Bloomberg Open Interest. You can see futures are up more than 1% on the S&P 500. That has to hold for that fact to be correct. The NASDAQ 100 futures are up 1.5%. So not at session highs, but hovering around that level on really optimism, on hopes that Donald Trump's tariffs on April 2nd will be more targeted than sweeping. You heard the bell on the New York Stock Exchange. If you look down there, you can see Liberty is ringing the bell, and this is a stock that's down 26% year to date. but it has quintupled over the last 4 years. So they are killing it. Down on the NASDAQ market site, you can see Ionis ringing the bell. Their stock is just down 26% over the last 5 years. So if you invested in that, you've lost an average of 6% per annum. In terms of the equity indexes here, you can see at the cash trade, we're looking at the same levels as we were on futures. A gain of more than 1% on the S&P 500, 57.28. The NASDAQ up over 20,000 again. And remember, Mike Wilson from Morgan Stanley, we're going to talk about this in a little bit. He says, now may be the time to buy, as that great rotation we had out of the U.S. and into international developed market stocks, that could be turning back around because of a weaker dollar and a bounce in earnings, or at least a bottom in earnings. The small caps, just for those of you who are still in, up 1.5% there. In terms of specific stocks to watch, really the auto sector at large is one that I'm watching because BYD has leapfrogged Tesla in terms of full-year revenue. Over $107 billion in sales at BYD, only $98 billion at Tesla for 2024. So maybe we're witnessing a shift in the EV hierarchy because they don't even sell cars in America. They don't really even sell cars in Europe. And still, they're doing better than Tesla in terms of revenue. Craig Trudell says that's because they sell hybrids. They sell EVs that have range extenders. GM and Ford obviously sell everything, and they're doing well today on hopes that we see these tariffs targeted. But of course, if you get big tariffs on European autos, that helps these guys with sales as well.
It's remarkable. Tesla up more than 4.5%, even with that BYD news, even though they're getting absolutely trounced in China. It just shows the kind of optimism that we have right now that tariffs aren't going to be those sectoral tariffs. So, Matt, I'm also watching basically the same thing with semiconductors this morning, because, again, it's this hope that when we get reciprocal tariffs, per the reporting, it's not going to be on individual sectors. So Micron, AMD, Broadcom, Intel, all up at least 1.2% this morning. Again, are Trump's tariffs going to be more targeted than originally thought, providing relief to this sector that, Matt, as you pointed out, had really been struggling in past months?
Yeah, certainly U.S. Semiconductors have had a real problem. Obviously, we've seen NVIDIA come off more than 20% from its highs, but Intel has been a story of failure, really, in terms of U.S. exceptionalism. Wall Street strategists getting more bullish on U.S. stocks, though. As I mentioned, Morgan Stanley's Mike Wilson saying a weaker dollar could improve earnings. And Goldman Sachs' David Kostin says foreign investors will continue to buy U.S. stocks for that very reason, putting about $300 billion into U.S. equities again, which is what they put in basically last year. So some optimism coming out of these big strategists.
That last one, though, David Kostin's reason, is almost a reason to say things haven't bottomed, because people have kept buying. If you look at the flow data, as we've sold off, it's mostly been hedge funds. Retail investors are doing crazy things right now. They're buying record amounts of ETFs. They're buying things like 3 times levered QQQs. We haven't had a bottom in the flows. In fact, we're only down about 7.7% from the top. So given Kostin's note, too, the fact that we have foreigners buying, is this really a bottom in sentiment yet?
Yeah, or you could also ask if people are going to buy the things that they haven't been buying. I bring that up because our guest, Joanne Feeney, has one recommendation on the list that's really underperformed a lot of the others in her group. Let's bring her back in, Joanne Feeney from Advisors Capital. And Joanne, I'm talking about Amazon. Not that it's done terribly, but it hasn't done nearly as well as NVIDIA or Tesla or even Meta or Microsoft or any of the other Mag 7 stocks. Google, you know, it's underperformed all of them. Is that why you like it?
Well, we would prefer it if it had been outperforming all of them, but we still like it here for future positions for our clients. We've owned it for a long time. And the reason I think why Amazon, hasn't done as well as some of the more pure play AI companies is because it's two companies. It's both the Amazon Web Services, where it's obviously, leading the market in providing those capabilities, but it's also an online retail company. And so it's going to move around based on what folks think of the consumer. And when, the consumer is threatened by potentially higher tariffs, slower growth, that becomes a bit of a headwind for them. But, look beyond that to how much share online is still gaining, and Amazon is the leader there.
Joanne, if we do see this pattern continue, that is dollar weakness, do you relook at some of your picks? Do some picks look more attractive if we indeed are entering this environment where the dollar is unable to sustain some of its gains against its peers?
Yeah, I think it's hard to invest based on what you think the dollar is going to do. You look at exchange rates; they're pretty much a random walk, and so they could shift at any time. And trying to figure out what the dollar is going to do is, I just think it's counterproductive. Find good companies. A lot of the companies that have international currency exposure are going to be hedging that currency exposure, and so movements from day to day, month to month in the exchange rates, will have some impact, but most likely it'll be muted. So I don't think that's the way to go. I think you're better off finding companies with strong drivers of sales, deep moats that protect their margins. And right now, margins are a big question with potentially those tariffs coming online.
There's a story out about Ant, Jack Ma's company that's developing AI with cheaper chips, apparently with Chinese-made chips. And through that, he's saved reportedly 20%. We saw, obviously, the DeepSeek news in January that was similar, but I guess bigger in terms of its effect on the markets. How do you think this shakes out for NVIDIA, for Broadcom, both of which you like?
Yeah, clearly the U.S. and China are, splitting up, and we're putting, our government and previous administrations have been putting more and more restrictions on exports of chips to China, which forces Chinese companies to find solutions, within their own countries, and that's what we're seeing happen. Claims of performance based on, those chips, they're going to keep coming, and they're going to have to make do. That doesn't say, though, that the NVIDIA chips, the AMD chips that are coming online, those co-designed with Broadcom, are not better and will not allow for more applications and more, really deep understanding, more reasoning models, as Jensen has talked about. So I think, we're still in the lead when it comes to chips, and therefore, NVIDIA's, Broadcom's, AMD's chips will still be seeing shortages for looks like some years to come. So that doesn't dim our expectations for those companies, but it doesn't also rule out China's progress, which I'm sure we're going to continue to see.
So it still helps this U.S.-American exceptionalism narrative, Joanne, but as we wait for April 2nd, as we get a drip feed of reports, and let's be honest, there's still so much opportunity for headline volatility as we get to next week. Where do you hide? Where do you stay? What do you buy that helps shield you somewhat for volatility that feels almost guaranteed?
Yeah, Danny, you're absolutely right. Almost guaranteed. We're certainly seeing a lot of it. There's a lot of risks out there. In fact, policy risks have only been higher during the great financial crisis in recent years and during COVID. So investors really do need to understand their own tolerance for risk. In our balance strategy, what we do is build in a lot of higher than average dividend yielding companies so that investors can ride out some of the volatility, and that might lead them to having in their positions, in their portfolio, some positions that might be boring, whether it's a Philip Morris or a Duke Energy or a Kinder Morgan. These are high dividend payers, and you can ride out the stock volatility by owning some of those higher income companies. But also, go to places that are going to be resilient, even if the economy slows down, even if tariffs come on board and hurt growth. Companies like a TJ Maxx that consumers tend to run to when their budgets need to be tightened a little bit. So those are some of the places one can go to build a little bit more safety into portfolios, reduce the volatility a little bit, more consumer staples. That will sort of help ride out some of the volatility that we're going to see in more discretionary stocks and more, information technology stocks.
Joanne, great to get your take in these incredibly volatile times. Investors, I think, need advice like that. Joanne Feeney from Advisors Capital talking to us on this Monday morning. As stocks rise, coming up, some analysts think stagflation is already priced into markets. Bank of America just came out with its strategy to prepare for the worst. We'll talk about that next, right here on Bloomberg. This is Open Interest.
So a number of people, I think from Homeland Security and or the CIA or NSA, have gone to Capitol Hill and said that TikTok is a danger to our national security. But the public hasn't been given that much detailed information about what the threat is. How much of a threat to our national security is TikTok?
The People's Republic of China acts adversely to the interests of the United States in different ways. One of those ways is through the dissemination of disinformation, the intentional communication of false statements. And TikTok is an extraordinary avenue through which to disseminate disinformation to millions and millions of people.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you
Okay, watching MSTR here. Just tweeted it out, but want to see us get over this resistance here. Boom. See, we kind of rejected there already once. So over 320.86, that's when I'll hop in. Whoops. That's when I will hop in long for a couple contracts right here. First I'm looking for this target, 329. Then I'm looking for 340. Right, but we need to see that strength through this resistance right here. See, it was support. Now it's resistance. I want to see us get through that, get us up to 328, cut a couple of contracts, and then hold on for more than likely a swing up to 340. Obviously, we need to see Bitcoin get a bit of a push here. Back up over 87,864. I'm actually going to put an alert here. So once I see that alert, more than likely, we'll have MSTR up above here. I'm going to set an alert here as well. There. Set it here. Right there's where I want that. All right, so we have those alerts. Right, those alerts are ready for us. And that's when we will jump in. Looks like it's getting close here, but other than that, I'll just leave on Bloomberg News, and then a little later we'll go through some articles here that I found this morning that could be interesting. But until then, just watching MSTR, listening to this for a little morning briefing, and then we'll get into it.
You want a straightforward blueprint for clients. If you believe, though some believe, that the market's already priced in stagflation from trade uncertainty. So again, this is a stagflation playbook, Matt. Bank of America telling clients that quality stocks, dividend payers, as you say, are among the groups that outperform the broader market during bouts of stagflation. But again, it goes back to this thing. If you are uncertain, how many people have already started to buy quality? Is quality the only thing that's really been doing well right now? So perhaps it's a trade that you might be a little late on.
I want to just point out we got global S&P Global U.S. manufacturing PMI, as well as services and composites out, and they are worse than expected on the manufacturing front. We're actually looking at contraction in terms of manufacturing, so less than 50. The read was 49.8. We were looking for an expansion at 51.7. That's a disappointment. However, on the services side, you have a gain and a bigger expansion, 54.3. We were only looking for an expansion of 51. Obviously, everything above 50 is an expansion. Everything below 50 is a contraction in these indexes. In terms of the composite, much better than expected, 53.5. We were looking for 50.9. So I suppose this doesn't have to be negative news. You can see that yields continue to rise and investors sell off bonds even more. The fact is, we know that this isn't a strong manufacturing economy.
Right.
And even if you're in Team Trump and you think that these tariffs are going to bring manufacturing back to these great shores, it hasn't had time to take effect yet.
Yeah, and it's the same story that we've been getting. The vibes are off. People are pessimistic. People think that the consumer is slowing, that they're not as robust. But again, you look at things like services, the hard data just isn't showing that yet. Is it because it has yet to appear? Or is it because in general, we are resilient?
Stocks absorbing this news fairly well, right? They're still looking at gains of more than 1% on the S&P. In fact, 1.4%. So stocks have not taken any hit as a result of this. And in fact, the gains are even better. I just want to point out that I mentioned TJ Maxx and its dividend.
Yes,
there's a great function on the Bloomberg, does offer a dividend. There's a great function on the Bloomberg. If you type any stock and then follow it with DVD, you can see not only the dividend with historic dividends under it, but you can see our dividend forecasts, which are shockingly solid. So they pay right now a dividend of 37.5 cents cash, and the Bloomberg dividend prediction is for a raise to 42.5 cents. You can see the orange dotted line there. So yeah, maybe this is one of those quality stocks that B of A would like.
Well, if the word is uncertainty, if everybody is talking about uncertainty, then maybe you follow the Bank of America playbook and you buy stocks like this that give you a sure thing, like a dividend. Will April 2nd give us that sure thing? And does quality look less appealing if you have some clear idea of exactly what the tariff outlay looks like?
I think the answer to the last question is probably not.
Probably not.
Because all of these things change at a moment's notice. Follow Truth Social. Coming up, more housing M&A as James Hardie Industries makes another housing play, AZEK. They make decking. Investors sell the stock on the news pretty big. That's the James Hardie stock, but they're buying AZEK to the tune of about 20%. More on that next. This is Bloomberg.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Let's get you a snapshot of what's moving today, and we've got big gains on the indexes really across the board. Check it out. The S&P 500 now up 1.5% at session highs. The NASDAQ 100 gaining 1.8%. So we continue to climb higher and higher and higher on hopes that Trump's tariffs on April 2nd will be targeted and not sweeping. We even absorbed kind of crappy manufacturing PMIs, although we got good composite services. Check out, obviously, the big kahuna here is NVIDIA. It's up almost 2%, which adds the most points to the S&P 500 of any other stock. But Tesla absolutely soaring, now up more than 7%. That may now overtake NVIDIA in terms of adding points to the index. Obviously, tariffs will be focused on cars. We may get tariffs more on steel as well, at least against European companies, up 4%. You can see Nucor, a gainer there in terms of steel. Semiconductors a focus, so ON is up 3.5%. Fannie Mae and Freddie Mac also putting up some huge gains today, and we know that this is a play. I think Ackman is talking about this. Can you confirm, Danny? Ackman is often talking about Fannie Mae and Freddie Mac potentially being
there's
brought
an investment
back
there
to
somewhere.
public markets. Yeah, absolutely. And as a result, although we're going to talk about the housing market as well in the next block. Time now for our top calls. Danny, what have you got?
Yeah, look, we got some individual stocks moving on this, on what analysts are focusing on. General Mills, they're getting initiated with an underweight rating at Morgan Stanley. They're up slightly, though, as is everything. The firm saying that earnings visibility is low and it expects sales growth to remain muted. Next up, we got Goldman Sachs. They're cutting Supermicro to sell, citing AI server competition and margin pressure. So those shares not participating in the rally, down nearly 3%. Finally, to wrap things up for you, Jefferies raising FedEx to a buy. They're confident the company can grow earnings, focusing on its cost-cutting plan. So, Matt, those shares up 3.5%.
All right, let's talk about those housing stocks. James Hardie Industries bought home decking provider AZEK for $8.75 billion, a deal that sparked, well, a drop in James Hardie stock, but who cares? It's not even traded here. AZEK is what we care about, and it's up
Australia?
almost 20%. No one cares about Australia on this desk. I mean, I'm sure it's a nice place to go on vacation, surfing, sharks, whatever. But we're talking about U.S. housing right now. So we're focused on AZEK. And this is really the second mega billion-dollar deal that we've seen in the past week. We saw QXO spend $11 billion for Beacon Roofing. Let's talk about this with Bloomberg M&A reporter Michelle Davis. She joins us now on set. So, Michelle, it looks like there's some optimism for the U.S. housing market.
Yeah, I think what's most interesting about both of these deals is there was this whole narrative that right now, with all of the uncertainty around, are tariffs going to happen? Where are they going to happen? What's the economy going to look like? People were saying industrials deals were really tough. But when you see two deals announced in a week around building products industrials, it means maybe, companies aren't as concerned as the narrative would suggest.
What about M&A as a whole? Is it remarkable that we got something through the line? Because deal activity in general, you know this better than anyone, Michelle, has been really muted.
So that's the other thing. I was looking at the stats this morning, and we're actually flat on last year at this time. Obviously, after the election, people were predicting, animal spirits, a massive flood of M&A. We haven't seen that yet, but last week, Google announced a $32 billion deal to buy Wiz. That was, something we hadn't seen a lot of. And so it seems like companies are still doing stuff, even if it's taking longer for them to get these deals across the line.
It does seem, though, muted here in the U.S. When you talk to your international counterparts, I noticed a couple of secondaries from BYD and from Xiaomi. It looks like Hong Kong's on fire, right? Are there other places in the world where M&A is actually happening?
We're seeing a lot more in Europe and the UK, but the one theme that we keep hearing is that these cross-border deals are harder to do just because, geopolitics are changing by the day. And so it is harder for companies to
All right, we're in. MSTR long, 328, expiration 345 call. Looking for 329.
False.
That, I think, really underscores the shift that we're having today with this hope that not necessarily its tariff is going to not be volatile, because we know that we might still get more announcements, but maybe just that the sell-off has gone far enough. So you can go in and buy things like Tesla. Again, Matt, we're probably going to get some more truths put out there, some more differing ideas on what trade tariffs might actually look like. So how much can the calm really last?
Right, and I can see, these tariffs, if you get 10% on European autos, very helpful for GM and Ford. I guess it would help Tesla as well. Dan Neal from the Wall Street Journal had a story out defending his purchase of a Tesla Model 3, even though Elon Musk. All right, coming up in the next hour, Shayna Sissel joins us from Banrian Capital Management, Mark Morelli of Vontier, a charging stock, and Mark Douglas of Mountain. This is Bloomberg.
Had been offers before to take over Greyhound, but then in the midst of the pandemic 2.5 years ago, we had this fantastic opportunity to buy the brand and the network. When we took on Greyhound onto the Flix tech platform for network management, revenue management, we saw the highest unit economics in more than 100 years of Greyhound history.
My vision is to transform long-distance bus travel in the United States and make it one of the top considerations for anyone planning a long-haul journey.
CEO Kai Boyson imagines even more potential if state and local governments recognise the need to support long-distance bus travel with integrated infrastructure.
We need to think about the infrastructure in the United States holistically and think about the transportation system as one integrated system. And intercity bus needs to be an integral part of that system. One should be able to connect from one mode of transport to another seamlessly, easily. We have great success models in the United States. For example, Los Angeles Union Station, Boston South Station, or New York Port Authority Bus Terminal, or Washington, D.C. Union Stations.
Kai and the team, they are doing a fantastic job. They have really improved the product, they have improved technology, they have really made the production more efficient, that at the moment it's also a profitably growing business.
Bloomberg has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. We begin with the popular genetic testing company 23andMe and last night's bankruptcy filing. The question is, what happens to your DNA results? CBS's Nancy Chen.
Here's what you need to do if you use 23andMe and want your data erased. Log into your account, go to settings, scroll to 23andMe data, click view, scroll to delete data, and click permanently delete data. Then you will need to confirm when 23andMe sends you an email.
CEO Ann Wojcicki has resigned but plans to remain on the board. The Trump administration heads to court in Washington this afternoon in its fight with a federal judge who tried to shut down deportation flights of suspected Venezuelan gang members to a prison in El Salvador. Correspondent Ed O'Keefe is at the White House.
This judge has been pushing the administration for more details on who exactly was sent on those flights, how many more people in this country could conceivably be sent away by using that law.
The Supreme Court hears arguments this hour on a challenge to Louisiana's congressional map. CBS News legal contributor Jessica Levinson.
If I had to guess, I think the Supreme Court would likely do what it did 2 years ago and uphold the redrawn maps, which include 2 majority black districts.
Black Louisianans make up about a third of the state's population. Wildfires are torching parts of the Carolinas.
Dozens of wildfires continue to burn across the windy, parched southeast. A large fire is burning near popular hiking spots, including the Appalachian Trail in Pickens County, South Carolina.
I go camping a lot, and it kind of makes me think of like my worst nightmare is someone who camps, but it's really not hard to prevent wildfires like this if you always do best practices. So really, it's just sad to see.
Dozens have been evacuated from their homes as several large wildfires burn in Polk County, North Carolina, south of Asheville. Jim Crisula, CBS News.
A wildfire forced the evacuation of 2 campsites at Wharton State Forest in New Jersey. In France today, 76-year-old actor Gerard Depardieu entered a courthouse for the start of his sexual assault trial. CBS's Elaine Cobb is in Paris.
A decorator and an assistant producer claim the actor grabbed and groped them while filming The Green Shutters. Depardieu, who denies the charges, faces 5 years in prison and an $80,000 fine if convicted.
Depardieu's lawyers call the accusations lies. The Dow is up 507 points on hopes President Trump is softening his tariff stance. S&P ahead 83. This is CBS News.
All right, just closed out two of these contracts for $510 each. Bought in for $4 each, so that's $220 profit right there. 8 minutes we were in that trade. Literally 8 minutes. Gonna hold this last contract until 3:30, till we test that 328 area. But other than that, that's an easy win.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube, so you can head over to youtube.com, search Bloomberg Podcast Lives, and that's where you'll find us. Coming up, we're going to get the latest on the markets. They are moving decidedly higher here. We're also going to check in with Dana Dioria, Co-Chief Investment Officer at Envestnet, get her thoughts on these markets. Derek Descloet, Bloomberg Executive Editor for Canada, is going to join us, give us the latest on the elections there that Mr. Carney has called for soon. Ava Benny Morrison, Bloomberg News legal reporter, going to talk to us about Apollo's Mr. Fix-It is now Trump's pick to police Wall Street. So we're going to get the latest reporting there. Sam Fazeli, Bloomberg Intelligence, he's head of all the European research, and he covers the pharmaceuticals. Get the latest from the healthcare business like we do every Monday because things are changing there so quickly. A lot coming up this hour. Let's kick it all off with Lisa Mateo.
You've got it in this Bloomberg Business Flash, brought to you by IBKR. Will U.S. natural gas production exceed 3.27 billion cubic feet in January 2025? At IBKR Forecast Trader, the yes recently at 9%. Check the data, spot the trends, start predicting today at ibkr.com/forecast. And speaking of data, we had more of it today. S&P Global preliminary March composite index for manufacturing. The expectation was for 51.8, came in at 49.8. Now, as for services, the forecast was for 51, came in at 54.3. We have more economic data out this week, including core PCE on Friday. Stay tuned for that. To the markets we go. Tech-heavy NASDAQ leading the gains, up more than 1.5%, 315 points. The S&P 500 up more than 1%, 78 points in the Dow, up more than 1%, 471 points. The two-year yield, 4.02%. That's up 6 basis points. And the yield on the 10-year, 4.32%. That's up 7 basis points. The Bloomberg Dollar Spot Index is little changed. And Tesla leading the Mag 7 stocks its shares are up more than 7%, almost 8% this morning. Meanwhile, Tesla competitor BYD topped $1 billion in sales last year, beating Tesla for the first time since 2018. Its shares are up 3% in Hong Kong. And finally, Hyundai expected to announce a $20 billion U.S. investment at the White House today alongside President Trump. That's according to CNBC. $5 billion of that will be used to build a steel plant in Louisiana. Its shares are up more than 3% in Hong Kong. For on-demand news 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, Lisa. Alex Steele here alongside Paul Sweeney. I love that you brought up that manufacturing PMI from S&P Global, because apparently, if you take a look at the service sector outlook, that deteriorated. Even though the headline number was okay, the sentiment for prospects over the coming year slid to the lowest level since 2022. So that outlook definitely risky.
Yes, and we kind of tracks what we heard from the UMich survey data a week or so ago. So again, I think expectations are certainly changing to some of the uncertainty that's out there. And we had a guest on earlier from SMBC Nikko Securities who was saying that these tariffs are going to be good policy, and the long-term gains will offset the near-term pain that we may see from a slowing economy, we may see from higher inflation.
What maybe if the April 2nd deadline is a little bit different, or it's pared back, maybe it is a different kind of situation. All right, let's take a look at some of the stocks in the move today. We're joined by Bloomberg's Bailey Lipschultz, Bloomberg News senior equities reporter. All right, Bailey, what are you looking at?
Start with BYD, the car manufacturer that Lisa mentioned, rallying up right ADRs right now, trading higher by, call it 4.9%. They trade under ticker BYDDY. This company reported revenue for 2024, $100 billion, more than $100 billion, leapfrogging Elon Musk's Tesla Inc. And guys, a lot of people say, oh, BYD, they're in the EV space. They have the 5-minute charge that can take you a couple hundred kilometers. They also make hybrids. And when you look at their total deliveries for last year, 4.27 million cars, almost matching that of Ford Motor. So this is an ADR up essentially 100% on the last 12 months and really adding to those gains. And again, pretty breathtaking numbers.
Speaking of hybrids, I bought a hybrid this weekend.
Ooh. What?
Yes. It's for my son who does most of his driving out in California where gasoline is really expensive. So he pitched me and he convinced me to do the hybrid thing. And the technology is really cool. I didn't even really know about it, but you get like 45 miles to the gallon because you're, for most of the driving, using the electric, and then in certain conditions, it switches over to internal combustion. But for a lot of the driving, you're not using the gas.
Yeah, my mom, who family lives in California, she's had a Prius for a few years. At this point, it's the same thing, sitting in there, watching it charge the battery when you're idling instead of wasting gas. Yep. And then you utilize the motor. It's pretty cool.
Yeah,
Hybrids.
Yes.
Hybrids. Wow. Okay, that just totally shocked me. I love how you kept that for that real-time reaction. All right, Bailey, what else are you looking at?
Well, we're watching the divide as it is for Lockheed Martin and Boeing. This coming after Boeing was awarded the next generation U.S. stealth fighter jet contract. So that came out at the back end of last week. We see Boeing shares under ticker BA up 2.4%, Lockheed down about 2%. Worst performer, or among the worst performers in the S&P 500. Analysts upgrading and downgrading on the news. Melius taking a bullish stance now on Boeing and also downgrading Lockheed. We also saw B of A downgrade shares. It really is a question of going forward. How much can this be a win for Boeing? New CEO, management dealing with all their issues for commercial jets, and also how can it be a dent for Lockheed? Boeing, according to analysts, is going to benefit to the tune of tens of billions of dollars in sales over the next few decades off of this contract. So going forward, bullish stance, and that's why we're seeing shares up higher.
All right, and to wrap it up, what do you got?
AZEK. I don't know if you guys have heard of AZEK. Do you have a deck? They make deck siding. So
no.
Oh, okay. Go.
AZEK getting acquired by Australian company James Hardie for $8.75 billion. AZEK shares right now up 15%. Cash and stock deal. Management defending the deal even after their shares took a bit of a nosedive in Sydney, down about 15%. The bet, according to the CEO, is on the number of houses in the U.S. that are older than 40 years, and saying that they're going to need new siding, they're going to need new improvements, whether that's different parts of the buildings, or if people just want to build a deck. Bearish analysts coming out saying, though, U.S. consumers are a bit choppy, so maybe now is not the best time to strike a deal. But we are seeing AZEK shares, again, up about 14%.
Yep, still waiting to pay that final bill for that house in Massachusetts. All right, Bailey, thanks a lot. Bloomberg's Bailey Lipschultz, Bloomberg News senior equities reporter, joining us there. All right, let's get to the broader market here. You're taking a look at treasuries. Still having a little sell-off here. Yields really pushing higher. The question is why? Is it just purely just a risk-on trade and then risk-off in treasuries? Let's get more with Ira Jersey, Bloomberg Intelligence chief U.S. interest rate strategist, joining us. Ira, when you look at a move like this, is this a purely, hey, tariffs might not be as bad, we're buying equities, we're selling bonds?
Yeah, I think it's as simple as that, Alex, at least this morning. The headline, certainly, of the S&P Global PMIs also didn't hurt any either. You saw a little bit of a move after that with yields moving up a basis point or two. But generally, it's the risk-on sentiment right now. And, you know, we've been talking about the entire year. We're going to have this play between, look, are we going into a recession anytime soon, or is the economy going to hang on just enough that the Federal Reserve is going to be reluctant to cut interest rates because, you know, the services sector is doing okay, plus tariffs might increase inflation expectations. So the market just hovering around this, you know, low 4% range for the 10-year yield is probably something that we're going to continue to see for quite a long time.
We're going to get some inflation data at the end of this week. Ira, how do you think the Fed's looking at this core PCE data that we'll get on Friday?
Well, they like the core PCE data, but usually, and in the recent past, the forecasters have done a pretty good job in determining where it's going to be, at least within 0.1%. So I suspect that the market, yeah, if there's a big surprise, obviously the market will move. But I think we'll move beyond that and think about next week's non-farm payroll report and some of the other PMI reports that we get from the U.S., from the Institute of Supply Management next week. Those tend to be the bigger movers, right? And the jobs market still is the key, with certainly CPI inflation being number two. Interestingly, when you look at what the 10-year yield has been most sensitive to in terms of changes when data points miss, it's always payrolls number one. CPI has been number two, but this PCE deflator is all the way down at number 7 right now in our list of the top 10. So that's fallen off quite a bit. Retail sales, on the other hand, that's now number 3. That had been number 2 for a long time. But those 3 are really the data points that you want to focus in on. That's certainly, when you see any shifts there, that's when you're going to see big moves in the Treasury market.
And we get some auctions this week as well, really in the belly of the curve. You had mentioned earlier last week that the 10-year had kind of found its high, but we're looking for a bottom. But what does that mean then for the belly?
Yeah. So we get 2s, 5s, and 7s. So those 5s and 7s is distinctively the belly. I actually think that tomorrow's 2-year auction will be maybe the most well bid this year of this week's auctions, in part because the break even and the risk factors that you can get at a 4% 2-year yield means that basically yields have to double over the next year for people to start losing money. So if you're an investor, even whether you're benchmarked to some index or you just want to hide somewhere, the 2-year I think will still get pretty good demand. But those 5s and 7s are the question, Alex, and I think that that they'll probably do okay. And I'm basing that on the fact that last week's 20-year and the 20-year auctions have not gone particularly well in general over the last couple of years. But last week it was very strong auction, was one of the strongest 20-year auctions that we've actually had since that point was reintroduced. And so I do think that 5s and 7s this week will probably go okay, particularly if they cheapen up a little bit here over the next 48 hours.
Have you totally tuned out at this moment because we're talking about auctions?
Yes.
Sweet.
I did.
Awesome.
Absolutely.
I feel you, Ira.
But I'm ready to follow up here. What's the soccer match we got to focus on in the next couple of days here, Ira?
Oh, well, I'm still depressed that the United States came in 4th in the Nations League over the weekend, losing to both Panama and Canada in the consolation game. So, ask me later this week, and I'll let you know.
He got him off his game. All right, Ira, thank you so much. We appreciate it. Ira Jersey, Chief U.S. Interest Rate Strategist, Chief International Soccer Strategist for Bloomberg Intelligence. He wears 2 hats. There. So a solid move here in the market here. And there's really nothing out there in my mind that justifies it other than a little bit of a relief here that maybe some of this incremental news maybe on tariffs may be a little bit less onerous than maybe the market was thinking about.
Well, I think it also then goes back to positioning. So if we were oversold anyway, then it won't take a lot for us to move then to the upside, and sort of maybe tariffs on April 2nd not being as widespread as the market feared is enough to actually do that. But, Mike Wilson of Morgan Stanley said that, look, the weaker dollar could actually help the outlook for U.S. stocks, and maybe we're going to see capital coming back to the U.S. So those calls already starting to percolate within the market.
All right, we'll see. Coming up, Dana Dioria. She is the co-chief investment officer at InvestNet. We'll get her thoughts on these markets here, as well as Derek Decollete, Bloomberg executive editor for Canada. They've got an election coming up. We'll get the latest reporting there. S&P 500 up 85 points. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. All right, we've got stocks kicking off the week with gains. Traders snapping up those beaten down tech shares. There's also more optimism over tariffs. We'll start with NASDAQ futures up nearly 2%, 344 points. S&P 500 up 1.5%, 87 points. And the Dow up more than 1%, 551 points. The 2-year yield 4.01%. That's up 6 basis points. And the yield on the 10-year 4.32%. That's up 6 basis points. To commodities, COMEX gold $3,025 an ounce. We go to oil. Brent crude $72 a barrel. WTI crude $68 a barrel. The Bloomberg Dollar Spot Index is little changed. Few companies making news. DNA testing company 23andMe filed for bankruptcy, and its co-founder and CEO stepping down, but will continue to serve on the board. Then Jack Ma-based Ant Group. It's built AI models that cost 20% less using Chinese-made chips, with results similar to those from NVIDIA. Speaking of which, not affecting NVIDIA shares much. Their shares up about nearly 2.5%. And Apple moving to the AI wearables market. It's adding cameras, visual intelligence features to its smartwatches. The way it works, you hold down the camera button, you take a picture of something, and then you have it analyzed by ChatGPT or Google search. The hope is that it helps people learn more about the world around them. There you go. For on-demand news 24 hours a day,
I know all I need to know.
subscribe to Bloomberg News Now. I'm Lisa Mateo. That's your Bloomberg Business
That's
Flash.
why I have my husband. I'll be like, tell me more about this
Yes.
random thing that you know
What
and
is
I don't.
this? Yes.
Yeah. All right. Thanks so much, Lisa. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. Happy rainy Monday in New York. We are broadcasting live from our interactive broker studio right here in Midtown Manhattan. Also check us out on YouTube as well. All right, let's get a check in on the markets. We're obviously seeing a relief rally here. It's definitely a risk-on kind of day. Does it last? What do you do with it? Dana Dioria is Co-Chief Investment Officer at Envestnet, joining us now from Hartford. Dana, is this the kind of day that you sell into rallies, or do you feel like, all right, things are going to go well?
Well, I mean, you know, the obviously the correction that preceded all of this was a lot more sentiment driven, I think, than fundamentals driven. And so, you know, if you're going to be trading on any of these moves in the market, you know, any of the, hey, now we're going to have a lot of tariffs, no, actually we're cutting back, it's going to be the dirty 15, it's not going to be everybody, et cetera, then yeah, this is probably a buying moment. I think for the average person, you know, and the average investor, it's more about what are the fundamentals here? Do we actually think, you know, the kind of the tariff tantrum that we're going through and have been going through and will continue to, you know, in spite of a little bit of positive news on that front, you know, is that something that's going to ultimately lead to broader concerns in the market? And, you know, look, corrections 3/4 of the time don't lead to recessions. But, you know, a lot of it depends on what news is yet to come.
For a world where there is some level of uncertainty, maybe greater than average, is it a way you construct your portfolio? Is it how you allocate your assets, or do you just buy quality and I guess hope for the best?
Yeah, so I mean, look, there's a lot of different ways you can kind of come at this. Certainly, and we sit, you know, Envestnet sits at the junction of a lot of managers, a lot of research services. I mean, certainly you're hearing a lot more international speak, you know. I came into this year, I'll be honest with you, we do these chief investment officer panels everywhere. And the idea of U.S. dominance was just, you know, very much a theme at these panels. And, you know, look, markets are cyclical. And certainly the U.S. markets had much higher valuations than international markets. I think you're seeing some repricing of that now. But, you know, the tone has shifted, right? And you're hearing more around, well, hey, maybe international diversification is a good idea in portfolios. We would say that's a long run secular asset allocation need, you know, for most people, right? Unless you're completely focused on U.S. indexes and can't handle the tracking error, we would largely say be diversified in international markets anyway. But we're certainly hearing more now, even from a news and macro perspective, that looking at international, you know, having diversification away from U.S. makes sense.
And do you have to sell something to then buy? Or is this like, hey, I had some cash, I'm going to deploy?
Well, that's a great question because, of course, we've been living in the last few years with this massive amount of money sitting in cash. And while it's great, we're past these years of financial repression for just savers. We all know that, that kind of the traditional wisdom is unless it's money you need in the next 3 years, it's probably better served than sitting in cash. So there are certainly people with money on the sidelines who they've missed, a whopping 20+% 2 years in a row from the S&P, for example. And as we all know, it's time in the market, right? If you're missing those big months, years, et cetera, it's really hard to make that back up when you look at the average that you accumulate over time. So look, if you have long run money sitting in cash, for sure, we would say that into a balanced portfolio. But the other side of the coin is you've also got a lot of people who leaned into stocks, right? Very pro-growth optimism that we started the year, obviously big run up, especially driven by growth. And so you have people who are overweight equities. And if you're overweight equities relative to your risk tolerance and what you can handle, you should be thinking about harvesting from the equity position if you're doing more equity. And you should also be thinking about getting more into fixed income.
Well, in your notes, you've got Bitcoin is no gold. So let me get your thoughts on Bitcoin.
Yeah, it's Bitcoin is 100% from my perspective a risk-on speculative asset. We read and you're seeing headlines obviously now comparing kind of the performance of Bitcoin and gold. Are these places to kind of hide out? Say again?
No, keep going.
Yeah, so look, are these places to hide out? And we would just very much point out that they are massively different. When people think about a Bitcoin investment, they're not thinking about it A, as a currency, or B, as, certainly, there's an argument that this is another form, it's digital gold. But from the standpoint of the volatility of these assets, there's no comparison. And when you're thinking about Bitcoin, it's really kind of more this asymmetric payoff, the potential for sort of like a lotto-like return. If you want that, that's fine. But thinking that it looks like gold and is going to be a safe haven asset, I think doesn't work.
Okay, so that kind of lined me up for the safe haven part. So all this taking into effect, what's like your best safe haven trade right now?
Certainly fixed income. The standard place to have ballast in the portfolio, I think, makes a lot of sense still. But if you're talking about within equity markets, you started off there, actually, you mentioned quality. There's a couple different ways to go after quality. You can do, traditional quality as a fundamental indicator. You're looking for stocks that, or frankly, ETFs or mutual funds with a bevy of stocks that have high quality earnings, right? So high profitability, not the need to reinvest, plow a lot of money back in, and also probably, cash-based earnings more than accrual-based earnings. So that's one indicator. Another is more a technical indicator, of course, which is just what is the volatility of that stock? And you've got a lot of ways to make that play too. The traditional defensive sort of, you can pick low volatility stocks, or you can pick kind of minimum variance where, the stock itself maybe is not the lowest volatility, but it doesn't correlate well with the rest of the market. So it adds sort of padding to the rest of the portfolio.
That's a really good point. All right, Dana, thanks a lot. We really appreciate it. Dana D'Auria, Co-Chief Investment Officer at Envestnet, joining us on the markets. All right, the news of the last 24 hours is that Prime Minister of Canada, Mark Carney, almost said Justin Trudeau, how quickly things change. Mark Carney calling an election for April 28th. Polls showing a close contest between his Liberal Party and the Conservatives. Joining us now for more is Derek Lecouté, Bloomberg Executive Editor for Canada. Hey, Derek, can you just walk us through what a snap election in Canada looks like?
Yeah, it's a really short election compared with what American listeners might be used to. It's only 5 weeks, so we'll vote on April the 28th, and it's really a two-horse race. Although there are multiple parties represented in Canada's Parliament, this really comes down to Mark Carney and the Liberal Party, which was also the party of Justin Trudeau. They've been in power for almost 10 years. And the Conservatives, led by a guy named Pierre Poilievre, who was a cabinet minister back in the day of the previous Conservative government of Stephen Harper, a very experienced politician, very economically focused, and it's going to be a very tough fight with the trade war and with Donald Trump's comments about the 51st state, kind of right in the middle of the discussion.
So that's kind of where I wanted to go. How is the relationship between Canada and the U.S. kind of impacting each of these candidates here? Do they have differing views? How do they approach it?
So it's become, according to certain polling, the number one issue in this election, the relationship between Canada and the U.S. for obvious reasons. It's important economically, but it's also because of the 51st state comment, kind of become this Canadian identity discussion. Now, polls suggest that the Liberals sort of have the advantage on that. They are seen as less ideologically aligned with the Trump administration. There are more members of the Conservative Party who kind of like Trump, and the Liberals and Mark Carney are trying to, politically make the most of that. They've run an attack ad, for example, against the Conservative leader, showing him using phrases like fake news and radical leftists, things that Donald
Is it a talent pool issue? Is it something the government can control, or have we just not waited enough for some, not all of the measures that have been put in place in the last, I would say, 2 years, to just simmer and bear fruit?
Well, I think there are two parts to this, right? Hardware is existing. The hardware meaning the buildings, the infrastructure, the availability, and how things function in Hong Kong. Our government functions, our city functions, infrastructure is in place that allows people to have mobility. The thing that's missing is really the software. And that's really the mental capacity, the professionalism, as well as the engagement and encouragement for foreigners to come in. Now, when I say foreigners, I also include China. But we also understand that the West has different ways of looking at things. And I read a fantastic book by a person called David Epstein that wrote a book called Range, is that diversity is the key to being able to grow and sustain your growth. And it's not about just saying, okay, we pull in the talent for the short term. We have to think short, middle, long term. And that process, we need the professionals to come in from overseas with different spectacles, different views.
So what is the biggest obstacle there, and whose job is it to fix that?
I think everyone has to participate. So here it is. Companies in Hong Kong said, okay, look, we need to look inward into China, our motherland. We have to help and provide the growth attributes to China. Now China has grown, and in the little hiccup in the economy, China will come back strong. But China is looking outwards as well, and we've lost the outward focus. And when we look outwards, has China been able to look through the Western vision or ASEAN vision to see what's happening in the rest of the world? So if we have infrastructure like we have Cyberport and we have the Science Tech Park and we incubate tech, are we looking to bring in the ASEAN players? Are we looking in to bring in the Western players to come in to look for funding? Are we providing the professional services? And then are we allowing them to enter into China and vice versa? China needs to go out as well as other countries can come in. So recently, I think it was yesterday that China announced that they're inviting international companies to come into China. Come in.
open up an office.
Nice move by Tesla today. Got over that resistance and then bounced. Pretty nice. Check in here on MSTR. We have one contract left. Broke through there, 331. Back down to 325 now. Gonna hold on to it. Hold on to that runner. Let's check Bitcoin. 88,000. What did it hit? 88.7. Okay. So nice bounce. I'd like to see 89. I think at 89 we will close that MSTR long. So let's wait and see. Here, obviously, you expect to see some cool off, obviously, but we'll wait and see what happens if it can hold this. Right, we need to get back above here. Nice rejection at our level, though, so our level is not wrong.
Into the city.
There's the premise of how Hong Kong established itself under British rule was that it was started off as a backpack economy. People came in from the UK in backpacks and started to engage in a work environment. That helped us and flourish in our restaurants and our food and beverage availability. Right. And it started with, through that became the investment culture, came the business side of it. So if we invite people in from international markets to come in, let's start with the ease of visa process. Come in, take a work for 3 months or 6 months, get your feet wet, understand what Hong Kong, the availability that Hong Kong presents, get your feet wet and start working in the environment. And then once you have found your footing, establish a visa process that's much easier to process. Get that involved, and that's government side of it.
Okay.
But the corporate side of it is that we have to change the focus of saying we only hire you if you speak Mandarin or Cantonese, and English is a byproduct. But the global environment for business and technology and other developments, medical as well, is English as the primary language that's spoken universally. So how do we encourage English to come back into the fray and then allow that opportunity to invite foreigners to come back in? So then we look at our education process and we look at our grassroots of Hong Kong that go through public systems. We need to be able to encourage English as teaching medium to be able to assimilate, allow, as the West comes in or China opens up, to allow Hong Kong to be able to flourish as well.
Mahesh, in 10 seconds or less, the next big metric we should be looking for that would show us that that's successfully happening?
Well, you talked about symposiums, workshop, symposiums, conferences, and all of that.
Conclaves, summits.
I just recently held a workshop for the discovery of a new space economy. And that new space economy is something that we need to focus on. Hong Kong needs to create the regulation. We have a meeting coming forward. But that's one aspect that adds to growth in GDP, 3 to 5%.
Okay, excellent. Thank you so much. That's Mahesh Harilela, convener of Family Council for Harilela Group and partner of Chartwell Family Partners as well. And you can get an insider's guide to the money people shaking up the finance hub here in Hong Kong. That's our Hong Kong edition newsletter, which is out every Thursday. You can sign up via Bloomberg.com/newsletters. Stay with us. You're watching The China Show. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
It's not exactly unbridled optimism you're seeing, but we'll take these gains in any shape and form they come. And some good news coming through here in the form of this scoop on Ant Group, this AI breakthrough using specifically Chinese-made semiconductors. In fact, for more on that specific story, let's bring in Min-Min Lo, of course, who has the details of this.
Yeah, so this is potentially a game changer because Ant is claiming that it's able to train AI models using Chinese chips from the likes of Alibaba and Huawei at a 20% cheaper cost. And it's training models that uses the MOE machine learning model. This is mixture of experts machine learning model. Essentially, it breaks down a task into small data sets to make it more efficient. You can imagine it's similar to employing a team of experts, each focusing on a specific part of the problem to enhance the overall efficiency. So typically such an approach will require the very high bandwidth memory chips like NVIDIA's chips, which are under export control. But Ant is saying they are able to achieve the same results as if you were using an H800 chips, which is the scaled-back version of the NVIDIA chips that were tailored especially for the Chinese market in order to meet the export restrictions. And it's also claiming that they were able to beat Meta on some of these benchmarks, such as English language understanding. But it claims that there are still some teething problems with training because, especially when it comes to stability, if you just change the hardware or the AI structure, model structure, just a little bit, it leads to a jump in error rate. But still, it's an important breakthrough because it would really lower and slash that development cost because the MOE model has been pretty prohibitive because it relies on those chips that are not really accessible to smaller firms, and it could put China on track to being self-sufficient in the tech race if they're able to make more efficient computational models that do not rely on these very advanced chips.
Okay, so a game-changing moment. Does it fundamentally then shift the rules of the game and the calculus for policymakers when it comes to US-China tech competition?
Yeah, so the way this competition has evolved was because of the policies from the US. And the two sides, US and China, are competing on very, very different paradigms because recently we had Jensen Huang saying that the DeepSeek moment, the fears around that and whether that would affect his company is unfounded because he says companies will still need better chips with greater computational capacity, and he's still doubling down on his strategy of having bigger GPUs with more transistors, more memory, more processing cores. But China is going the opposite way where they're going for cheaper chips, but they are changing and making the computational model more efficient. So it's a very different way of doing things here.
Okay, well, keep our eyes peeled. Thank you so much. That's Bloomberg's China correspondent Min-Min Lo for us. And now, Swedish retailer IKEA says it's looking for new ways to manage costs and be more resilient amid the global trade war. Inter IKEA Group CEO John Abrahamson Ring spoke to us at the China Development Forum in Beijing.
We believe in a global, regional and local supply chain, and that we have been done for many decades. We have worked with that. We are 87 years old as a total IKEA, so we have a very long-term perspective. We are not a public company or anything like that, so we don't have to worry about the next quarter or the next year. We think decades at IKEA, so we are continuing to build the right structure based on what we do. With that said, we do believe that open rule-based trade is something very positive for the world, and it's been very sort of positive also for IKEA, of course. So,
what are the main discussion points, though, in the boardroom when you talk about building in supply chain resiliency? We had supply chain challenges, obviously, through the pandemic. Now it's because of a trade war.
Yeah, but as you said, we're constantly looking at how to become even more resilient, and I think this regional approach is actually benefiting us. So to supply 75% of what we sell in Europe, and to supply 80% in Asia, for Asia is very good, and now we're building up also capabilities in Americas, and that we have been doing for the last decade. We have opened more markets in Americas. We've opened Colombia, we've opened Chile, we've opened Mexico. We continue to evolve our business in Canada and the US, and of course we will continue to become even stronger also as a region in Americas.
Yeah, so how do you keep the costs down when there's so much uncertainty on raw materials and sourcing of the products?
Yeah, we continue to. The main driver of cost, or an opportunity for reducing cost, is to grow in volumes where you can scale on fixed costs, and that is a real key enabler of that, of course. Then, of course, in all the transformations we are doing now with environmental and sustainability intentions, also has to come with even lower costs. If sustainability becomes more expensive, it will have very little effect for the world and also benefits for IKEA. So we are looking into even smarter ways of utilizing raw material, finding ways of circular flows that when you scale that can become very...
that means recycled material.
Exactly, recycling. But that has to also happen on scale. So for recycling, it's a lot about identifying, being able to trace material so that you can use that in a way, and then you have to find a scalable model of how to do it, and that is a lot of progression in many industries, etc., but also in home furnishing.
Yep, and that was the IKEA Group CEO John Abrahamson Bring with our colleague Stephen Engel, of course, there in Beijing. Plenty more ahead here on The China Show.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning and welcome back. Now, South Korea's Constitutional Court has dismissed the impeachment case against Prime Minister Han Duck-soo. Han was accused of aiding and abetting President Yoon Suk-yeol's abortive declaration on martial law. Bloomberg East Asia government editor John Herskovits joins us now for more. John, firstly, what does this decision mean in terms of the leadership in South Korea?
What we're going to see now is that Han Duck-soo is reinstated as prime minister, and he's reinstated as the acting president of South Korea. The decision mostly concerned Han's actions as the acting president. The court avoided anything to do with the martial law declaration, which is something that the opposition camp contended. So what we have now is still the undecided leadership in South Korea, because we're waiting for the decision from the Constitutional Court on the impeachment motion against President Yoon. The decision may come in a few days from the court. We don't have a time frame for it, but if the court decides that that the impeachment passed by Parliament is justified, Yoon is removed from office. It sets the clock ticking, 60 days to a presidential election, and in that time, Han will continue to serve as acting president, barring any unforeseen circumstances.
Right, and John, I'm just reading some of the latest lines coming through here out of Han himself, calling for this bipartisan cooperation in terms of state affairs. And I'm wondering if you could give us some context here. So while this domestic political drama is taking place, there is, of course, the backdrop of, and just to mention, South Korea is an extremely exposed economy as it pertains to these tariff conversations. And I'm wondering, what investors can latch onto as far as the leadership is concerned to be able to shelter the economy from these trade headwinds?
Yeah, one thing with Han is that he served in both the in conservative and also progressive administrations. He's a diplomat, he's seen as a centrist, kind of a steady hand through the process. So I think the call for the bipartisanship is to make sure that there is some sort of sense of leadership as South Korea is going to face the tariffs that Trump is going to announce on April 2nd, globally reciprocal tariffs. South Korea's economy is incredibly exposed. It's an export-driven economy. So having some sort of stability there is warranted. But again, there's so much up in the air for this. We just don't know how the decision will go with President Yoon. And also the main opposition leader has an appeal for one of his a conviction on graft that's coming up this week, which can also fold into the mix. There's just a lot of turbulence going on in South Korea now. And Han said that he respected the decision. He also said he wants to get down to urgent work. So I think he's trying to show that through this period, he will be able to serve as acting president, and hopefully he'll try to draw upon some of the bipartisanship that has been a part of his career in South Korea.
Bloomberg East Asia government editor with the very, very latest. John Herkovitz there, following all of that drama in South Korea and elsewhere in the world. Here are some of the big global stories that we are following this morning. Turkey has formally arrested Istanbul's mayor Ekrem İmamoğlu on corruption charges. The move to jail İmamoğlu could prevent President Erdogan's main political rival from running against him in the next elections. The arrest has already triggered mass protests in several cities. Turkey's capital market regulator has banned short selling and relaxed share buyback rules to cushion potential market turmoil. Canadian Prime Minister Mark Carney has called for an election for April 28th after requesting the dissolution of Parliament. Polls indicate the race will be a close contest between Carney's Liberal Party and the Conservatives, led by Pierre Poilievre. Both parties have promised tax cuts and are making the case for who would be better at negotiating with President Trump over tariffs.
Right, just a brief look at markets right now. So earnings is a big theme we will continue to check, revisit, review, and then look ahead to, of course. So in the course of this week, 2.2 trillion in market cap on MSCI China only, and then let alone, of course, you have other markets too. Our reporting this week, today is the big one, of course, out of BYD, and some of the names on your screens as well. Hang Seng Index about 90 minutes into the session, and we'll take advantage of this visual on your screens and this pickup from the lows, and then just return back to the lows of Morgan Stanley. And note this hour, revising higher their GDP forecast for China for the year to now 4.5%. That's it from us here today. We'll see you all tomorrow.
What are your thoughts on fast fashion? It's been transformative. It gives the masses access to fashion, but there's a cost to it, downside to it.
My first notice is too much waste. I think this is also how I grew up, making your own clothes and making something that's well special and well unique. It's like timeless. And now you see that everybody is looking the same, like wear sweatshirts and wear t-shirts. And for me, it's just like when they wear something that's special, they feel empowered.
Is there a need for fashion to be more mindful of the impact it's having socially, environmentally?
Definitely.
Is it happening enough?
I think it's happening. It's gradually happening. All the designers are doing, everybody is thinking about this subject at this moment, thinking how to be more sustainable, how to be more environmental friendly.
Do you think the fashion industry is doing enough, to ensure that it is sustainable? There's so many targets out there. Are they even realistic in wanting to achieve them?
I think some of them are just like they're using sustainable ideas as a marketing concept only. They're actually not really doing it. I think as a designer, it's really important to really make it happen. Every collection, I think about how to do it and how to tell the customers. I think that is our responsibility to educate our customers.
In case you missed it on the China Show.
Compared to a 10% tariff on Chinese export to the United States, I mean, even the entire determination of the fentanyl industry in China is totally worth it.
I think this is a monumental moment for global AI development. DeepSeek did was not only just make the products free, but also they released the entire research open source so you can see how they did it. This has forever democratized this current most advanced version of AI.
How do your students feel about their jobs prospects?
There are a lot of opportunities in this AI application fields. On the other hand, if you look at traditional manufacturing, I think the main problem is that there's a lot of mismatches between supply and demand.
Don't miss the China Show live every weekday.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Live from the Milken Institute's Global Investor Symposium in Hong Kong. This is Insight with me, Haslinda Amin. U.S. stock index futures climb in Asia on signs the next round of U.S. tariffs may be more measured than previously suggested. But China and Australia issuing fresh warnings about global shocks from the Trump trade war. Now here at the Milken Symposium, we'll be joined by PIMCO's Managing Director, President and Head of Global Credit Research, Christian Stracke, to discuss opportunities in bonds and private credit. Plus, we talk about the business of sport in Asia with Eldridge Industries co-founder, chairman, and CEO, Todd Boehly. Well, it seems like a happy Monday. We're seeing some relief among investors on signs that the next round of Trump tariffs could be more targeted than previously suggested. Bloomberg's heard from official sources that the April second wave of levies could see some countries or blocs being excluded, and the Trump administration is also said to be holding off for now on separate sector-specific tariffs that were set to be announced at the same time. Now, meanwhile, Chinese Premier Li Qiang told global business leaders gathered in Beijing that the country is prepared for trade shocks.
We may have unexpected shocks mainly from external factors. When necessary, the Chinese government will introduce new incremental policies to ensure the smooth operation of the Chinese economy.
Premier Li there speaking at the start of the China Development Forum in Beijing. Now, guests include top executives from across the world, such as Apple CEO Tim Cook, who have been asking delegates for their takes on U.S.-China trade tensions. Take a listen.
The tariff impact to us in 2018 was about $10 million. So it's a very small impact on a very large company. We'll continue to watch it carefully. We'll continue, but we're not going to react fast. We're going to watch what happens, and we're just going to make sure we continue to support our customers.
We are constantly looking how to become even more resilient, and I think this regional approach is actually benefiting us. So to supply 75% of what we sell in Europe, and to supply 80% in Asia, for Asia is very good, and now we're building up also capabilities in Americas, and that we have been doing for the last decade.
Our Chief North Asia correspondent Stephen Angle is at the China Development Forum in Beijing. Steve, give us a sense of the sentiment on the ground.
Well, the sentiment on the ground is caution, obviously, given the uncertainty about the next round of Trump tariffs and the impact on the Chinese economy. Clearly, Donald Trump's administration has well telegraphed the intent to apply more tariffs, already 20% additional because of the fentanyl issue. We don't know how far that might go if the Chinese administration does not resolve or address the fentanyl issue to Donald Trump's liking. And that is kind of a topic that is talked about a lot in the sidelines of the China Development Forum. In fact, when Li Qiang talked yesterday, he did not even obviously mention fentanyl. When China had its state media readouts of the meeting between Steve Daines, the Montana senator, and Li Qiang in the Great Hall of the People, where Steve Daines essentially said the main issue on these tariffs is fentanyl, and there is no room necessarily for further negotiations on non-fentanyl issues with the Chinese until the Chinese address the fentanyl precursor export issue that the White House claims is the main reason for the drug problem in the United States. But look, state media is not even saying or reading out that there was a discussion about fentanyl. So we're at loggerheads. So again, I think the fentanyl issue, according to the Americans, is far more important than how the Chinese are addressing it. They are looking after their own house, their own domestic economy, and trying to attract foreign direct investment, which fell by the most last year since 1990.
Of course, Steve, the tariffs escalating the tension between the U.S. and China. We know that the U.S. Senator Steve Daines was in Beijing. What was the messaging like?
Well, yes. I mean, Steve Daines, I talked to him right here on this spot about 24 hours ago. He said he had to wait to give us this interview until he had a chance to talk to Li Qiang, which he did in the Great Hall of the People. And the big takeaway from that was, as I interviewed him along with my colleague from Bloomberg News, Lucille Liu, just as he was about to fly to back to Washington or back to the United States, he essentially said there is no other negotiations with China until the fentanyl issue is resolved. So a pretty succinct conclusion to those talks with the Chinese. But, you know, one offshoot of that is, how is this fentanyl issue going to be resolved? Well, one of the big reasons, or one of the big ways, would be a high-profile U.S.-China summit between Xi Jinping and Donald Trump. Only then can those two leaders give their various and their respective bureaucracies the marching orders to combat the problems that are souring relations.
Steve, thank you so much for that. Bloomberg's Chief North Asia correspondent Stephen Angle in Beijing. Let's get insights, perspective. We're live, of course, from the Milken Institute Global Investor Symposium in Hong Kong. Joining us right now, Christian Strack, Global Head of Credit Research at PIMCO, which manages about $2 trillion in assets. Christian, good to have you with us. There's so much angst in the market. We're seeing some stability today, but, you know, some are saying perhaps we might see the kind of collapse which we saw during the dot-com bubble. I am aware you're not looking at the equity markets, but in terms of the general sentiment among investors, how would you categorize that?
Well, thanks, Linda. It's great to be here. Certainly there is a lot of angst out there. Certainly there is a lot of fear, and there's uncertainty around the path of policy in the U.S. That's really the story. But what we've seen a few times already is that we get statements that are fairly extreme and the results end up being less so. And I think if we see that pattern continuing to emerge of maybe a negotiating stance that is fairly alarmist, but a reality that is more manageable, then that angst should fade, and any fears of this kind of a collapse or a dot-com bubble or something like that should also fade. conditions are very different today versus where they were in 1999. Yes, valuations are stretched. There's no question that they are stretched and they are exposed to changes in sentiment, changes in economic conditions, changes in bottoms-up reality. But the companies that are highly valued today are much healthier, much more profitable than what we saw in 1999. It is night and day different in that sense.
Valuations are stretched even after the recent sell-off, S&P trading at 20 times earnings. The question really is whether the U.S. economy is robust enough to support the valuations and the kind of growth story that everybody's talking about.
Well, the U.S. economy is pretty resilient. I mean, we've seen this over and over again, that it keeps getting
So not concerned that the Fed has cut its growth projections for the U.S. economy?
Well, there's no question that growth in 2025 will be a little bit lower than what we and most were thinking, as early as a few months ago. What we're seeing in the combination of policy, the tariffs will be a dampener on sentiment, and that will, all else equal, pull growth down. And also some of the fiscal tightening that we're seeing from the government efficiency initiatives that are coming out, that will cut fiscal spending, and that will, all else equal, pull growth down. So that'll cool growth, but not anywhere near to the extent, in our view, that you get a full-on recession that would validate some of the fears in the equity market and in risk markets.
You're obviously in the right space. There's been a credit frenzy. Do you expect that to continue?
Well, I'm not sure it would be a frenzy, but certainly, like in valuations in equity markets, you're seeing that spreads have been very low. Now, they've been very low for a reason. Defaults have been low. Generally, corporate fundamentals are pretty strong, especially in the investment grade market. So you have spreads where they are for a reason. And no, we don't expect that there would be any, similarly to equities, we don't expect that there should be any serious pullback in credit markets anytime soon. But again, like in equities, valuations are stretched, and if there's economic cooling, if there's a cooling in risk sentiment, we'll see further widening in spreads. We are, if you look at our portfolios, we're a little cautious on corporate risk right now across the capital structure. But we're seeing a lot of opportunities away from corporate credit in asset-based credit, whether it's in securitized liquid markets or in more private credit markets in a lot of the asset-based opportunities that we're seeing. There you get very interesting opportunities, high single-digit type of returns, but without the frenzy that you mentioned in corporate credit.
There's a sense of that perhaps in some spaces it is overcrowded. Spreads are really, really so tight and thin. What are the chances it could tilt over?
Well, you would really need a recession. That's what it would be. Because fundamentals are reasonable right now, and so and also demand for fixed income is strong, and that's the important thing. That demand for fixed income is strong because the all-in level of yields is quite high. So people see that they're underinvested in fixed income, and they look for fixed income opportunities. That brings them into investment-grade corporate bond market. That brings them into the high-yield bond market. And those flows have been what have been supporting those low spreads in combination with relatively strong underlying fundamentals. So as long as that remains the case, which seems to be the case, the Fed is going to be cutting maybe 50 basis points or so this year, which leaves the all-in level of yield still quite robust. You'll still have those flows into fixed income. That'll still support the corporate bond market. You would need a much more serious turn in economic conditions to drive spreads significantly higher.
Is it then fair to say that the best opportunities right now would be in the U.S. and Europe? Given the turnaround in Europe, that's greater interest, and the U.S. seems resilient, as you said.
The best opportunities right now are in core duration in the U.S., the U.K., and Australia. By duration, we mean core interest rates, core government bond yields in the U.S., U.K., and Australia, where yields have repriced to an extraordinary degree. I mean, it wasn't that long ago, in 2019, that real interest rates were, so all-in yields minus expected inflation, were deeply negative across most of the developed market. Now you have a significant repricing into positive territory. If you had asked most clients 5 years ago, 6 years ago, when real interest rates were negative in the United States, and said, imagine a 2% real interest rate on U.S. tips, 10-year tips. A 2% real interest rate, how much of your portfolio would you put into that? They would have said, well, all of it, or maybe not all of it, but, a significantly greater degree of it. But that'll never happen. Well, here we are. here we are with these yields that are extremely attractive. Now, people are not all in because we've had 3 years of an adjustment in fixed income markets, 3 years of volatility and 3 years of fear in fixed income markets. But as it becomes apparent that inflation is cooling and will continue to cool, and the Fed is cutting rates and will continue to cut rates slowly, then that'll keep that interest alive in fixed income, and then people will take advantage of these really interesting opportunities in those core government bond yields, and also the interesting spread opportunities in securitized credit, which remains interesting, not as tight to any degree the way that you see in corporate bonds, and also in what's being called asset-based finance, the private credit opportunities linked to residential mortgages, consumer loans, auto loans, equipment finance, that type of thing.
Before I touch on private credit, I want to touch on the high yielders. And Asia, of course, is home to a lot of the high yielders. You get perhaps double the yield in the U.S. Would you find, the high yields in Asia attractive? Where would that be, and what would you be playing?
Sure, in emerging local markets, generally speaking, we do find those attractive. So those would be the local fixed income markets of some Asian and emerging in general. They sort of come and go in terms of which ones are most attractive, but what we would say is a diversified portfolio across EM local does look interesting. EM local, many emerging market central banks were more aggressive than the Fed and the ECB in jacking up rates to fight inflation, and so they have more room to cut. Inflation has been more responsive to come down in many of these markets, and they're following. So generally speaking, yes, we do like EM local, including some of the Asian opportunities.
Let's pick up on private credit.
Yeah.
Everybody is in on it. You have Blackstone, you have Apollo, you have your pension funds, sovereign wealth funds. It does seem like it is an overcrowded market.
Well, let's step back a little bit and recognize that private credit offers a very interesting alternative risk premium, if we can call it that, which is the illiquidity risk premium. So how much do you charge for locking up your money for a period of time? How much additional spread do you get for that? And so that's what pension funds and many sophisticated clients have seen, is that if you want to find a diversifying risk premium that is not the same thing as an equity risk premium or a credit spread risk premium, then what could those be? And the illiquidity risk premium is that. So you lock up your funds and you get a return on that. So that's the opportunity. Now, what's happened is that it has been dominated by flows into corporate direct lending, basically lending to levered, private equity-owned companies. And that's a fine business, and that's a good business, and there's a lot of opportunities in there, but that's what's become crowded. And this year, the deal making has been less than expected, which has meant that if you have money to lend, there's that much more of competition for deals. And so you're seeing spreads come down. But spreads, even in direct lending markets, are still well north of what you see in the liquid leveraged loan market, the liquid high-yield bond market. You're getting less of a illiquidity pickup than you had in the past, but you're still getting a reasonable pickup in our view. But meanwhile, what's happening is that the opportunity is morphing into a much more diversified opportunity set. So especially since the regional bank failures in 2023, you're seeing U.S. and European banks looking for partners to take down a lot of the assets that they originate.
What is interesting right now is the convergence of private and public credit. I mean, are your clients now looking for a strategy that deals with both?
It's a great question. We have many requests right now from clients, sophisticated clients, that have exposures in public markets, have exposures in private markets, but are looking for something that straddles the two, looking for something where the manager, like a PIMCO, is looking for the best risk reward across public and private markets. They're really interested in the more investment grade profile of some of these private asset-based finance opportunities. So residential mortgages backed by the home, auto loans backed by the car, aviation finance backed by the plane. In all of these cases, you have collateralized lending. It is a more resilient opportunity. It's not double-digit returns, or maybe it's low double-digit returns, but
Before we let you go, We just want to know the biggest risk for markets in 2025 would be?
Hands down, let's not overthink it. It's inflation. Inflation is cooling. That's the good news. The most recent numbers have been constructive. But let's not forget the risk over the last couple of years remains the risk this year that inflation
So the Fed might hike instead of cut?
No, it's unlikely, but that is the risk.
Christian, good to have you with us.
Thank you,
Christian Strack of PIMCO. And we have breaking news right now. We have Philippine stock market to start trading after nearly a 2-hour delay. That is just coming through right now. Let's do a check on how the Philippines is doing at this point in time. We're also having the Philippines currently, PCOM currently down about 0.5% as trading resumes. And Indonesia's stock benchmark, the JCI, extending its loss. Remember, there's been trepidation in that particular market, murmurs of a possibility that the finance minister may be making an exit. She's come out to say that is not happening, though. That's not providing any comfort at all. The JCI currently extending its loss down about 3.6% as we speak. Quite a tumble there for the JCI. Well, keep it here with us. Our next guest co-owns the LA Lakers and is chairman of the Chelsea Football Club. Is now eyeing similar investment opportunities in Japan. Eldridge Industries Chief Todd Boehly will be joining us in just a couple of minutes for insights on the company's outlook and expansion plans in Asia. Keep it here with us. This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech. It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Welcome back. Australia's Treasurer is warning that the Trump administration's policies will have a seismic impact on the global economy. Jim Chalmers spoke to Bloomberg ahead of delivering his pre-election budget on Tuesday about the risks Australia is facing.
Now, this is a whole new world of uncertainty that we're dealing with here. The changes out of the US, for example, are not surprising, but they are seismic. We're seeing uncertainty, policy uncertainty out of the US. China is slowing. We've spoken about that on a number of occasions. We've got conflicts in the Middle East and Europe. We've got political uncertainty and division around the world. And so the budget is designed not just to respond to all of that uncertainty, but to make ourselves more resilient in the face of those external shocks. And the Future Made in Australia is really the most important way that we're going about that. And there's billions of dollars in new investments in green metals as part of that effort.
Unannounced ones or just the ones you've announced? So
the ones that we've made clear already. They'll be budgeted for on Tuesday night. I mean, we've got a huge agenda that brings together our industrial possibilities, the energy transformation, the strengths and advantages that we have in critical minerals and in other areas. And so we intend to play that winning hand. The world is changing all around us. The world is fragmenting. Supply chains are being reconsidered and rebuilt. And we think we've got a very compelling offer to the world. And so the budget is about making the most of that opportunity, maximising our advantages in the interests of Middle Australia.
Now, on that, I mean, about a week after you hand down this budget, in fact, almost exactly, we're going to see new tariffs unveiled by the US administration on April 2nd. Are you worried that those tariffs could throw all your hard work in the budget completely off track if they are particularly, big or impressive?
Well, obviously, we're concerned about these escalating trade tensions around the world. As I said before, they are casting a shadow, not just over the budget, but over the global economy more broadly. Australia's got a very trade-exposed economy, and we are concerned about these trade tensions. Nobody wins from a trade war, least of all a country like ours. And so we're obviously engaged with the US administration, with our counterparts there, but we're also designing a budget which is all about making sure that we are beneficiaries, not victims of the way that the world is changing. Future Made in Australia is part of that. The Buy Australia plan is part of that as well. All of this is about recognising the way the world's changing and trying to make sure not that just we're not victims of that change, but that we can benefit from those change as countries around the world are looking for reliable partners like us.
Now, you've mentioned the sort of negative side from the US, but there's a potential positive side in that the new tariffs put on China might unleash a wave of economic stimulus from Beijing. I mean, obviously, there's a few unknowns at this point, but in your opinion, in the Treasury modelling, do you think that will end up being a net negative or a net positive to Australia when balancing those two factors?
Well, we've seen a number of steps taken by the administration in Beijing to try and support growth in the economy, but we're still seeing China slowing.
And that was Australian Treasurer Jim Chalmers speaking to Bloomberg's Ben Westcott in Canberra. Of course, we had breaking news right now. We are extending, Indonesia extending the losses on the JCI. Its benchmark currently below 6,000 for the first time since 2021, falling as much as 2.8%. In fact, it is down by more than 3% as we speak, dragged down by an extended slide in material shares on the back of plans for higher royalties. Of course, this is one market that's been under a lot of pressure on the back of the populist policies of the president, also murmurings initially about the potential exit of the finance minister. She has denied that is true. Again, the JCI currently down more than 3%. It is below, or it has since inched up above that 6,000 level. Coming up next, from the Milken Symposium in Hong Kong, we'll have Eldridge Industries Chief Todd Boehly joining us for an exclusive conversation on the company's outlook and expansion plans in Asia. Do keep it here with us. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. Bloomberg has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Versace in Davos, Switzerland, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome back. You're watching Insight. Bloomberg's been told that Jack Ma-backed Ant Group has used Chinese-made semiconductors to develop techniques for training AI models that would cut costs by 20%. Let's bring in our China correspondent, Minmin Lo. Min, tell us about this breakthrough and what it means for the industry.
Yeah, it's quite an important milestone because Ant is claiming that it can train AI models using Chinese chips from the likes of Huawei and Alibaba at 20% less cost. And it's training these models that rely on the mixture of expert machine learning approach, MOE approach. It's deployed by DeepSeek and Google. It essentially breaks down a task into smaller data sets in order to enhance efficiency. And typically this approach would require high bandwidth memory chips that are, number one, very prohibitively costly, and number two, they are the most advanced of them are under export control. So Ant is saying that they are able to achieve the same results with Chinese chips as if you were to use an H800 chip from NVIDIA, and that's a scaled back version of the NVIDIA chips that were designed specifically for the Chinese market in order to meet export control rules. And Ant is saying they're able to beat even Meta on some of these benchmarks, including English language understanding, but there are still some problems when it comes to certain parts of training, especially when it comes to stability. If you change just a small part of the AI model structure or the hardware, it leads to a big jump in error rate. So there are still some challenges, teething problems there, but a big important milestone that could slash development costs for the AI players in China.
Meanwhile, we're aware of the tensions within the US and China in the areas of tech and AI. I'm just wondering how this changes the calculus for that relationship.
Yeah, the rules of the games are very different in US and China because the paradigm is very different for the US. You look at Jensen Huang, what he said at the GTC conference last week. He said that the impact, the fears around the DeepSeek impact on US tech are unfounded because he said companies will still need more computational capacity. He's doubling down on creating bigger GPUs with more transistors, more processing cores, more memories. But China is kind of going the opposite way, where they're doubling down on getting using cheaper chips and lowering making the computational process more efficient. So very different way of moving ahead in this race.
Min, thank you so much for that. Bloomberg's China correspondent Min Min Lo. Now, S4 Capital Executive Chairman Martin Sorrell says he remains bullish on Chinese tech due to AI and the government's softening stance towards the sector. He spoke to us ahead of the China Development Forum in Beijing.
What DeepSeek indicates is the strength of the Chinese tech industry. Going back to President Xi meeting with the tech leaders, when you I think I'm right in saying Alibaba was going to be split up into 5 pieces.
6 pieces, yeah.
6 pieces at one stage.
They scrapped that.
They haven't been done, right? So that's interesting, because I think that's also reinforces the point that we were discussing, that big tech is hugely important. And, you should see it, if you're in government, whatever the system is, you should see it as an enabler, not just for growth, but for security, defense, and other objectives. So I think that is happening. And I actually feel that, I'm more bullish on the China. I've always been a raging bull on China. I will continue to be so. I'm a little bit more bullish now, maybe against the trend than before, because I think the Chinese government in the last year has tried to address the issues, has tried to take a more stimulative position. I don't know how much more firepower they've got. I think they have some. And I think my view is they should use it.
What does DeepSeek and the others do to the calculus for tech valuations?
Well, obviously it shifts the needle, but it increases the primary demand for AI. I mean, DeepSeek...
Open source does not necessarily make the kind of returns that OpenAI and others are trying to talk about. That's why they justify the investment.
The key is the utilization. If you're asking about the CapEx, I got chastised. I remember we were having a private conversation with a group of people, and I said, I was a bit concerned about the level, because the Mag 7 spend $500 billion a year. Amazon's at 100 billion. I think Microsoft is at 80, Google's at 75, Meta's at 60. I mean, these are huge amounts of money each year that are invested in capacity. Is it too much? And NVIDIA, who we have a close relationship with, said to us last year, the big issue is use cases, or lack of them. Mm-hmm. This year, it's the same thing. What you're seeing is, as a result of DeepSeek, and in fact, applications that will be even more effective and even more efficient, it's going to increase the primary demand and accelerate it. It will bring into question what you're saying, what you're asking about, which is, does it make sense to spend all that money on capacity? I mean, I won't go into the detail, but there was a famous story that I was told of one government seeking to invest heavily in data centers. And when the authorities were asked, why do you want this capacity? What are you going to do with it? They said, don't worry about that, we'll figure it out. And I think that's what's happening, that everybody sees this as a prize. They want to build the capacity, but the use cases are not there.
And that was S4 Capital Executive Chairman Martin Sorrell speaking with our Chief North Asia correspondent, Stephen Angle, in Beijing. Now, China's AI boom is forcing investors to focus their attention on markets and opportunities outside the U.S., especially here in Asia. We're coming to you live from the Milken Institute Global Investor Symposium in Hong Kong. Joining us now is Todd Boehly, co-founder, chairman, and CEO at Eldridge Industries. He's also the chairman and owner of Chelsea Football Club and an owner of the LA Dodgers, the LA Lakers, the LA Sparks, and Cloud9. Prior to founding Eldridge Industries, Todd was president of Guggenheim Partners and founded the credit business at Guggenheim. We can talk about everything under the sun, given what you've done so far. First off, let's talk about the economy. There's so much concern about how the U.S. is sneezing and the rest of the world will be catching a cold. Do you see that when it comes to the investment climate?
Listen, I think we look at it over long periods of time. I think the U.S. is retrenching, and I think healthy retrenchment is really what allows you to move on to the next plateau. So I think the good news is that there's been, things got a little bit ahead of themselves, and now we've retrenched, and I think we're going to watch what I hope and expect the whole world's waking up. What Germany's doing, is really interesting. I think what's going on in the Middle East is very interesting. And I think America is just a locomotive engine that will end up, continuing to be very strong. Whether or not it goes in a direct line, I don't think so. But long term, I think kind of this mark-to-market that's going on in our country, I think is really healthy.
But is environment influencing, shaping where you put your money, where you're investing?
Most of the things that we do are thinking about it as measured over long periods of time. So we try to find trends, and we like to be in businesses that are good businesses day in and day out. Right? Senior secured lending, I think, is a good business day in and day out.